Are you going to be getting a mortgage in the future? Or maybe you're in the process of getting a mortgage right now, but you're wondering about best practices. What can you be doing on your end to make the process of getting a mortgage quicker, smoother? What if there were certain things that you should be doing and some things that you shouldn't be, which would allow you to get through this process of getting a home loan quicker, easier, and with less stress? Wouldn't you want to know about that? Well, in this video today, I'm going to show you some of the top do's and don'ts and best practices that I use with my personal clients every single day to ensure a 5-star experience and as little friction as possible while they're getting their loan. Check it out.
Why is it important to know and implement best practices when getting a mortgage?
So a mortgage can be a complicated process. There's a lot of moving parts. There's a lot of people involved. I mean, it takes a village to close a mortgage. It really does. We're talking about loan officers, processors, underwriters, closers, title companies, attorneys, appraisers, etc. That's just the surface of the people involved. There's a lot of others. But because there's so many moving parts and so many things involved, there's a lot of opportunity for things to get screwed up. And it happens all the time.
Will each mortgage company or even a loan officer such as yourself have individual best practices, or can these be used for, let's say, industry-wide?
Yeah, I think generally they can be used industry-wide because almost every mortgage company is offering the same type of products. What I mean is conventional mortgages through Fannie Mae, Freddie Mac, FHA loans, VA, USDA. You might have a bank or a credit union that only offers one product, but that's few and far between. Most offer similar programs. So the best practices we'll be covering here are really applicable no matter who you're using for your mortgage.
I would imagine that there are some main areas of friction during the mortgage process, right?
Oh, yeah.
Yeah. What are some of the...
Yeah, there's quite a few. I would say the number one area of friction, it's communication. Really, it is. Because the mortgage process, it's not a 3-day process. In most cases, you're looking at anywhere from 30 to 90 days to get a mortgage. Obviously, on my side, I try to get them done in more that 30 to 45 day, but there are some banks and credit unions that are taking 60 to 90 days or even longer to do a mortgage. So because it's so long, there's a lot of communication that needs to be done with all the different parties involved through the process. My way of handling that, my best practice is, number one, identifying the information up front, right? Like how people want to communicate, when they want to communicate. Number two is I have an online portal that I use called Flowify that shows everybody meaning the borrower, the realtor, and other people we can invite in, where we're at in the loan process. There's like 10 steps. It'll show you what step we're at and when we're anticipated to go to the next step, all the different deadlines, where we're at as far as meeting them. So that's huge. Realtors absolutely love that. The next piece of friction is going to be documentation, because there's so many documents needed. We're in a business that revolves around documenting things and explaining things and showing things in writing. That's what a mortgage is all about. But again, we need to find out, how do you prefer, as someone getting a mortgage, how do you prefer to actually send your documents to us so we can make sure it's going to be compliant and it's going to work?
Talk about some of the best practices around, let's say, credit and debit when getting a mortgage. Debt. Credit and debt.
The first best practice around credit and debt is going to be, do not do any inquiries on your credit report after you put in your mortgage application without discussing it with your loan officer. I would say this comes up about 30 to 40% of the time if I don't cover it with my clients ahead, which I do try to. Any inquiry, whether it be a credit card, a student loan, an auto loan, your brother asked you to co-sign his lease on an apartment for him, anything like that that's going to have an inquiry on your credit, you don't want to do. And here's the reason why, is that when you're getting a mortgage, the underwriter is going to do what's called an LQI, or a quality control credit report, about a week or two before the closing. And they will see any and all inquiries you've done on your credit when they pull that report. Before we go on, as far as the best practices around debt, you don't want to make any large charges on your credit cards, because again, those will show up. That could derail your debt to income ratio. It might kick you out of getting the loan program that you originally approved for. So again, if you have an emergency scenario, discuss it with your loan officer ahead of time. Let them know how much you're needing to charge. They might be able to say, oh yeah, put it on this credit card, not that one. No large deposits into your bank account more than 25% of your income without discussing. That's something we've touched on quite a bit. Don't make a bunch of transfers from one bank account to another, or retirement to bank account, and back and forth and back and forth. Creates such a hassle, and I see people do it all the time.
What are some common issues that can derail the mortgage process?
So don't change jobs, don't change positions. Absolutely do not change careers. Okay, I don't care if you're going from making 50 grand a year to 100 grand a year. It doesn't matter. If you're changing careers, there can sometimes be a huge issue with underwriting. We don't have time to go into the detail of how that works in different loan programs, but it could make it so you may not even qualify at all, even if your income's going up. So that's number one. A big one that I see people think not being a big deal that is going from a W-2 job to a 1099 job. Yeah. That can be big. Or vice versa, going from 1099 to W-2, going from salary to a commission. Even if you're W-2, the last one I'll give you, and this is a no-brainer, but I've had it happen once, is quitting your job before closing or getting fired. Now you see there are some amazing best practices that you can use to get through that mortgage process a lot easier. Share this video with someone who's either about to get a mortgage or maybe someone going through the process that's having some issues. If you found value in today's video, smash that subscribe button and also hit the bell so you get notified on all of our future content. I'd love to hear from you, so comment on this video and let us know maybe a best practice that I didn't cover here that you've used to have a smooth mortgage process. I do offer free consultation, so if I can be of assistance to you or anyone that you know, go ahead and reach out to my office via call, text, or private message. You can reach me at 860-413-3938. Again, 860-413-3938. Hope that helps, and take care.